Cool. Oh, okay. What's going on, everyone? Welcome in. Welcome in. A few minutes. We'll get started. What's going on, Randy? Welcome in, dude. Talk about a trend day. Today was definitely that solid type of trend day. Hopefully everyone pretty much. I know that Avery pretty much was expecting this kind of price action. I was expecting a green day, just not to this extent. So I gotta say that was definitely a little bit surprising on the extent of how much we really pushed. I wasn't expecting it to be that much of that big of a push here today, but that was definitely a solid trend day. I'm glad to hear, Randy, that you had an excellent week so far. That's definitely a good sign. I know that it's been quite the whipsaw in either direction, and this is why I think for the past few weeks you've heard me say be careful with what you swing. I think pretty much just day trading for the most part has just been more so the bread and butter and just taking it day by day, waiting for what the market gives you. I think even this morning you heard Tom say he's not even going to make a day trade until Euro closes, and that's actually improved his trading. So things like that kind of usually help. So whether it's waiting for the Euro to close to make your day trades, whether it's not swinging positions overnight, whether it's avoiding certain sectors, maybe avoiding the tech sector as a whole. Maybe there's some traders out there that do that. There's different strategies that pretty much help. So hopefully that's maybe some kind of encouragement for those of you that maybe are doing bad. But that's definitely different strategies that are out there that you can take advantage of. That maybe if you have been doing bad, pretty much look to change it up just a bit. All right. Uh, Thomas, what's going on between the Tesla push yesterday and the VXX squeeze today? If you got into that VXX squeeze this morning, that was insanely crazy. When I heard that it was halted, I was a little bit shocked because I didn't think that was real at first because I saw Thomas pretty much comment in our chat, but usually he would have been the one to really say something or announce something. So I really did not expect that to be actually true. And then Avery went and confirmed it while he was on live with me, and I was like, all right, something here is going on, right? The market was just continuing to stay steady and continuing to rise, and we just got that halt out of nowhere. Next thing I saw was that we had the headline in the Tendy shop in which the VXX is basically no longer more so acting as our volatility index. It was more so a short squeeze that was pretty much taking place at the time. All right, and so that's pretty much what caught my attention early on in the morning. And so other than that though, it was pretty much just waiting for our levels to pretty much cross. I know that Dapper and Tatum were pretty much just watching the steady uptrend all day today. And that's pretty much why me and Avery are a little bit silent. There too much. There's not too much to talk about when you have such just a one-way direction in the market. Everything just melts with it per se. All right. So it was definitely a great day in terms of that. I'll get into what I expect with the Fed and going into the Fed real quick. Matthew, glad to hear that. I'm excited to have you on board with TFC. I actually spent a lot of today actually working on some projects in which it's going to be coming out for everyone in TFC. So a lot of exciting stuff, some more signals that are hopefully on the way for you guys. Can't give out much more than that. But definitely appreciate you, Matthew, joining in on the YouTube live from just joining TFC. So, other than that, though, let me see what this it say. Says that 800 call definitely went in the money if you actually held that. I'm assuming you probably held it until it went right in the money, Sids. I'm assuming that, but I'm glad to see that you banked nonetheless, though. All right. Other than that, getting right into it, into pretty much what I expect going into tomorrow. Granted, the fact we had such an amazing rally today, that was definitely just so strong. Let me just put a watermark on my screen here so you guys can see what I'm looking at the time. Pretty much just looking here at the daily on SPY, right? So we actually can see this nice daily green candle that we ended up having pretty much from the bottom of 418 roughly towards where we ended up closing here, just roughly around 426. What I actually noticed today, and I didn't realize it until I saw some headlines come out and some tweets. But looking at the SMA, the simple moving average off of the daily on SPY, you pretty much notice that this is basically what you would consider to be a death cross, in which the white line considered is the 50-day moving average, the simple day moving average, and the yellow is the 200, in which that was basically your little death cross that you would consider that. All right. And so typically after a death cross, it usually, I know just the word itself pretty much seems death, right? You would expect the market to continue going down, but usually what ends up happening is that you pretty much get a nice bounce right after that death cross, in which we pretty much confirmed that yesterday. And so I do expect us to get a continued bounce, to be honest with you, whether that's through a gap up overnight or that's pretty much going right into Powell. But I'm anticipating that we're going to end up reaching into 430, in which that's that our red line right here, in which that's the 20-day moving average. That's what I anticipate is going to happen. If I were to say where the direction move is going to be right now, short term, I'm expecting to actually tap this 20-day moving average on that green line, and then we would pretty much reject and retrace. The only part about the retracement after we get pretty much reject that 430 level is that I would hope that we actually do not make a low, pretty much a higher high, in which is going to signal a short-term relief rally, in which we're going to see a bigger move, maybe above that 430 mark that we're going to reject off of. That's my only concern. Otherwise, we smacked that 430, and then we're pretty much looking at our levels. Pretty much the big levels that we're looking at downside wise is going down, breaking, of course, our low that we have of that 411, then pretty much watching 400, and I'm also watching 397 on SPY. All right. So those are pretty much the three big levels that you're watching in terms of downside price action. But pretty much two things that I'm expecting tomorrow. Either we're going to end up having a little bit of a small gap down tonight, and then we pretty much get a nice little relief and rally pretty much right in towards the Feds, in which maybe it's even a gap fill that we're pretty much trending towards right into Jerome Powell, and we get our news. Otherwise, we get a gap up tonight, and then we get a dip at open and we rip right into FOMC. Those are pretty much the two ways in which I'm looking at it. But either way, I see an uptrend nonetheless, whether it's from red to green or it's pretty much green just going even higher. I see an uptrend going into the FOMC. That's basically what I'm expecting. All right. So that pretty much gives you your highlights. As far as FOMC itself, in which where I see that we can see our turn in our direction here, is that if you guys actually remember what Powell pretty much said the last time that he ended up talking was that he was pretty much laying it out that we're gonna have a rate hike of 25 basis points. That's pretty much what he laid out last time. Now, as we see, pretty much pressure is continuing to mount up. One thing that I can also pretty much also highlight is the 10-year bond yield, and pretty much I'm sure a lot of you have been looking at this as I've gotten a lot of attention towards it, and pretty sure you guys have heard me mention it. Is that the 10-year bond yield is usually a telling story right now, in which we're about to smack our head into the resistance right around this 220 mark, 224 close enough. We're likely going to end up seeing that be our spike tomorrow, nonetheless, regardless of what he more than likely says. But what I'm actually looking for in terms of downside is that if he mentions anything above 25 basis points tomorrow, the market will likely take that in panic and we will see an immediate sell off. That's one thing in which I'm looking at. Otherwise, if we do not hear anything above what the expectation was of the 25 basis points that he laid out previously, in which at this point I do believe that's pretty much priced in, then I think that the market is going to continue to just rally, and we do see that trend and that push right into 430 as we would expect, right? As I would expect rather, right into that 20-day moving average. But if he says anything above the 25 basis points, maybe he changes his tune about pretty much increasing how many rate hikes we're gonna have for throughout the year. The market may take that the wrong way, and obviously the most impacted will be the tech sector. So that's what you're going to want to be listening for. Of course, I'll be watching the 10-year bond yield. I've seen instances where we pretty much push higher on the 10-year bond yield and the market rallies with it. So I would not be surprised to see that we have the 10-year bond yield pretty much pushing that 224 tomorrow, and also SPY pushing towards that 430 mark. That would not surprise me, given the fact that also usually the first reaction of FOMC that day is usually the wrong reaction until the market makers pretty much digest it all. And then that could also indicate that maybe Thursday will lead into a red day. So I'll pretty much be here tomorrow afternoon to maybe go over what I see and maybe what I'm expecting, depending upon what the price action is tomorrow, of course, right? But that's pretty much just scenarios in which I'm playing out in my mind right now, in which the ways that I could see this pretty much going about. But if you actually saw my pretty much my live yesterday, and pretty much hopefully that ended up helping going across all the queues, all the major queues, the Apple, Amazon, Google, Facebook, all those different names. And if you notice, one trend about most of those names was they were all pretty much near their 1 month lows, and that's basically where we ended up bouncing. We saw in particular Apple. Pretty much these past 2 days, we've seen that, I believe that was off of Friday, if I'm not mistaken. Apple was pretty much flirting with breaking its uptrend on the daily. And we were also flirting with that 1 month low, in which I was waiting for Apple to show its weakness. We haven't seen that kind of weakness out of Apple and Microsoft in particular. And by the way, that Microsoft rally today was also pretty intense as well, right? But given the fact that Apple pretty much was pushing towards its 1 month low, that 150 level was pretty crucial for it to hold. Otherwise, that was going to be a massive sell off as it continued. But nonetheless, it held that 150 level. We're now right back at 155 as though we never really had much of a dip off from that stock. I think the buying pressure today was just amazingly crazy. I saw also flow pretty much going through the tape here, 157.50 calls. So that may also coincide with SPY maybe rallying about those next 3.5 points or so, in which we're gonna end up seeing Apple pretty much near that 157.50 level. So that would not end up surprising me. But nonetheless, like I said, hopefully if you saw that yesterday, knowing that the fact that they were pretty much bouncing off a key level, a lot of them sitting at their 1 month lows. So that's what we're gonna look to see tomorrow. Hopefully, if Powell ends up saying anything beyond that 25 basis points, beyond more than the number of rate hikes that are expected for this year, then we'll see that panic and we'll see tech pretty much take the bigger hit out of all that, and we'll actually just wipe out today like it never happened. All right. So that's pretty much what I would expect and what I'm pretty much looking forward to. A lot of different scenarios. Market usually just goes into neutral territory, going right into FOMC. So we can pretty much go either direction here, and it's literally just going to be off of the verbiage of what he says. Either market's going to take it in panic, or we're just going to continue as normal, and we'll see SPY pretty much go right into that 20-day moving average at 430. All right. Just quick answer. KCK. Tay is still around. So he is gonna. I know that he's back in some normal routines. He's working on some back end stuff. I think as far as like promotions or whatnot. But he is around. You could probably tag him in Discord, and hopefully he'll probably answer you. But I know that I know he's working on some stuff. That's all I know. But I know he's around. All right. We're hedging with the XLF. Be smart going into FOMC. Here's the only thing about that, and I'm glad you actually brought up that point, Matthew. I know that the financials have been pretty steady and they've pretty much been running steamrolling right into FOMC. If you noticed yesterday, financials were up. Today, financials were up yet again. So I would not be surprised to see if we get any kind of gap up tomorrow, that the banks are going to hold steady and we're going to pretty much push high right into FOMC. So I don't expect us to actually come out of FOMC with the banks continuing to rally. I would rather expect to see what you would consider your sell the news event. I think this is going to be your sell the news event, in which you're going to see pretty much sellers profit taking start to step in on financials. So that's my only caution about financials. Obviously, if Powell pretty much announces that it's going to be higher than 25 basis points, then of course that would pretty much benefit the banks, and I could see the banks getting a quick pop off of that. But that's the only concern that I have. So I don't mind holding banks going into FOMC, and maybe you get that spike right off of an immediate reaction of something he says. But following the FOMC, I think you're going to see a lot of profit taking and some sellers step in, and the banks are going to take a little bit of a dip. So that's my only caution about the banks, pretty much. All right. Other than that, that was pretty much what I wanted to highlight. Um, you're hoping it tanks. We'll see what ends up happening. Any thoughts on HYMC? I'll take a look at the ticker. I haven't really looked at that ticker at all, but I'll take a peep at it for you. Let me see if I can take a look at it. Mr. Serious, I can't blame you for being bearish until the market gives you a better direction. Right now, if you actually consider, even though we had that relief rally, I would say today, the market is still in a defined downtrend, as I would say it, pretty much, right? So I think that's probably one of the things you usually hear me say, not just about individual tickers, right, for the most part. But I will say, if you're in a defined downtrend, there's no reason for me to really swing calls, right? Unless you're excuse me, unless you're really trying to get outdated positions and you're trying to go long in which you consider that this may be the near bottom, I'm not trying to pretty much buy the bottom in which is just a defined downtrend, right? There's nothing indicating that we've broken that downtrend as of yet. All right. Pretty much looking into this mining right now, as you mentioned, it's energy. I know that energy has not been as hot as it was before, but I realize that this one's pretty much, you see, it's a lot of profit taking has pretty much stepped in here. So it's not looking as great as it was once before. I know that someone actually, it looks like someone actually had me take a look at this before. We had a gap that we pretty much filled. The other thing that right now that you're pretty much sitting in is you're basically inside of a gap fill right now at this moment, in which you're gonna complete that gap fill right here, right about $1.41 is where you're gonna end up completing that gap. And if I want to say where I would potentially look to find a buy entry, is that I think your ideal entry is right between that 137 to 140 mark is ideally where I would want to enter a position. That's where I'm looking to see as support. You would absolutely need to hold that 137 level in order for this to get a reversal at that mark. Otherwise, if you don't find support at 137 and that's not your bottom, then you're gonna end up seeing yourself coming right back down, even rather lower. And I can see this coming back down as low as about 90 cents in just the immediate term. All right. So I would look forward to hold 137. That would be the ideal buy-in spot. That'll be after the completion of this gap fill. And if it can't hold 137, then you're coming down to 90 cents, and that's not going to be, that'll probably be your next buy entry per se, in which you would want to see it hold at that 90-cent level. All right. Penny stocks a little bit more tricky. Obviously, you're pretty much flirting with a lot more of a pump and dump scenario. So that's the only thing that you want to be cautious. But look for levels in which you see a lot of confluence, in which you see that it's pretty much it's made that breakout and it's tried to hold and bounce right off of that 137 level. So that's what I would pretty much look to see if you end up holding or not. All right. So hopefully that ends up helping you there. Other than that, someone mentioned TYSM. Let's see if I can take a look at it. Did you spell that wrong? I'm assuming. I'm assuming maybe you were assuming Taiwan Semi. If maybe that's the case, Matthew, I would just pretty much just double check. Let me know if anything. But yeah, TYSM doesn't come up with anything. Let me take a look. CACC, credit acceptance. Now, this is a ticker I have not looked at all. So this one is definitely new to me. If I'm pretty much looking, let's see if I can look at maybe the weekly here. I just want to see a larger picture, what I'm looking at. See if there's a level in which we're pretty much retesting as our breakout. And you're pretty much right near that breakout, that prior breakout level. So I do like the spot that you're pretty much sitting at. This is definitely one that you pretty much it's sitting at the right spot. It bounced right where it needed to. You pretty much have confluence in which that was a prior level in which you peaked back from August of 2018. You see that was pretty much prior support or resistance through the middle to end of 2019, and you also broke out from that level basically back from July 2021. So I do like the fact that you pretty much bounced off of right where you needed to bounce off of today. If I was looking for your resistance in which you would extend this move, in which you're pretty much looking at towards 499.40 is where you're looking at. And the reason I say that is because that actually acted as prior resistance previously. All right. So if I pretty much draw a trendline resistance right across, you pretty much see that you've actually hit your head right on that 499 level more than one time in previous occasions. Back here in pretty much April of 2019, you also peaked here June 2020, and then you also wicked off of it July 2021, in which you continued the uptrend. So I would expect to hit that resistance right around that 499, call it 500 mark, and that'll be where you want to see us break back over the 500 to get a full-on reversal back to and getting an uptrend going. Otherwise, you fail to pretty much get over that 499, that 500 mark, then you're coming right back into the zone in which you're going to fall below support here of that 463 mark. All right, and then that's not going to be end up being pretty. And you're going to end up pretty much going right down towards 449 rather quickly because that's going to continue to pretty much press, and the selling pressure is going to be escalating there. All right. So, but definitely a nice spot in which I identified that it pretty much bounced. But that 500 mark is definitely going to be key in which you want to see a break over. Especially with finance pretty much pushing, I would expect to likely smack your head on that 500 level tomorrow, as we likely see financials just steamroll right into the Feds tomorrow. So I would look for that. But pretty much if you're in a position right now, look to take profit at that 500 mark. Otherwise, maybe leave a runner or so if you do have more than one position size in this. All right, but that's how I would pretty much approach that. The other one was CEI. I'll get to the TSM one real quick. See, I haven't looked at this one in quite a bit, but this one's also a penny stock. Ew. What's going on with everyone in penny stocks? Everyone sitting in penny stocks lately? Is that what's going on here? Damn, I can't even look at this thing. That's literally flatline. It's not even going anywhere. Literally not even moving, barely. I literally have to zoom into this quite a bit. All right, so let's see what we're looking at here, because this literally just looks like an extreme pump and dump scenario. That's basically what we're looking at. So basically what you're trying to do with this one is that you're trying to find where your defined downtrend resistance is. Here's your defined downtrend resistance that we picked up pretty quickly there off of CEI. All right. So you see that you're pretty much defined resistance. You basically want to make a break here over this 83 mark is what you're looking at to get a break on the downtrend, right? So if we get that break over that 84 cents, then you can see this potential gap fill here over this 99-cent mark. So you'll be pushing about $1 to $1.05 in which you complete that gap. But unless you pretty much get that break over that 83-cent mark, I would stay sidelined and I wouldn't even touch this thing. That's pretty much my view on this. If I really had to say an ideal level, if you had to put a gun to my head and I really had to buy this thing, I would probably say my ideal level in which I'm looking to buy this is 56 cents. That has confluence in which you pretty much had your bottom right here and you had your prior resistance back from February 22nd. That's what I would pretty much look at. Other than that, I would say sideline until it ends up breaking that 83-cent mark, in which that's about a 5-cent move to the upside. All right. Let me look at Taiwan Semi before I actually forget. I know that uh, I believe it was pretty much Anthony that was holding a position in this one. I know that he was pretty much bearish on it. Obviously, today's price action that was not very helpful in that matter. But just the fact that I think right now you're just in a peculiar spot right now with semis. We saw how much the semis pretty much ran today. I saw AMD, Nvidia. Nvidia just went bonkers today. I think Dapper mentioned that as well. It was up about $16 and some change today. So it's all going to be contingent upon tomorrow. I think it's kind of hard to say exactly what you're looking at in terms of Taiwan Semi here tomorrow. But if I was looking at a particular resistance level, this is what the resistance level in which I'm looking at. You're literally looking at right about 103 is where you're looking at, and about $1 upside here. So granted the fact that you had such a rally today, you could see another dollar move out of it tomorrow, but I'm hard pressed to say that it's going to get more than just a dollar move. Maybe we see this stretch as far as maybe eh, about a 103.70, about 103.70 if it really wanted to stretch. I don't think it can even stretch that far, but 104 would likely be that stopping ground in which I would look to pretty much regain short back into the position. All right. But obviously, granted the fact that you want to see how we come out of FOMC tomorrow, that'll be the bigger picture. But 104 would likely be my top on this, in which I would end up looking to get into reshorting it, in which I would expect the market to go back down, obviously, in a bearish sentiment following tomorrow for FOMC. If we rally off of FOMC, then different scenario. All right. Let me see the other one. Someone mentioned Trupp. Let me see Trupp. Commercial services. See if we look at the daily on this. So I do see we pretty much bounced where we needed. Another one that's pretty much bounced right off of support here. Bounced pretty beautifully right off of that support level. So nice little bounce off support here. If I'm looking for a level in which I would see that we pretty much smack our head onto some resistance, it's right around this mark right here. And I'll pretty much explain why as soon as I get this across. All right, so as you see, pretty much we wick this pretty much this level right here as we continue to break out. That was back from September 2020. We ended up retracing all the way back down to support, popped again, and we acted as support off of this level, which is that $80 mark, before continuation of the uptrend. We also acted as intermediate resistance here as well, back from April 2021. Also broke out back again from that level in May of 2021. We had that full on breakout. We also again we acted as intermediate support as well, September 2021, and we're pretty much going right back into that level in which we're gonna see if we get a breakout or if we end up rejecting off of that $80 mark and we come right back down to our major support of this $70 level. So that's how I would look to play it. I would look to see this pretty much go right into that $80 mark. $80 would be your high end, pretty much your top end of your resistance, in which you want to be cautious about and look for rejection. And then if it ends up rejecting, you're coming right back down to support. All right. So that's pretty much your two key levels. $70 is your support, and your breakout level is that $80 mark, in which that's what you're going to want to be looking for. All right. And that's pretty much the two key levels I want to point out there in terms of that one. All right. If you do get that breakout at that $80 mark, then your next immediate resistance is sitting right around that 87. I want to say in particular, 86.96 is that level in which you're watching for. All right. Other than that, Amazon, I know I looked at Amazon yesterday. Not too much has necessarily changed. I think right now you're pretty much going right into resistance. If you pretty much see off the daily, in which maybe you didn't see it yesterday, you pretty much bounce right off of the support level that you had. That was intermediate support back from basically June of 2020. We bounced right off of that level as we did pretty much from basically March, the beginning of March here. And so if I pretty much look in after today's price action, you're basically looking in terms of your downtrend resistance, in which we're pretty much in a well-defined downtrend resistance here. You have not gotten over that downtrend resistance quite yet. And so for that reason, I would pretty much, like someone actually mentioned that they were bearish going into FOMC tomorrow. I'm still leaning bearish on Amazon until I can see that we end up breaking over this downtrend resistance. Till we break that downtrend resistance, I would continue to just stay short on this. For that matter, I know that today was just pretty much an oversold rally. I know there's a lot of trap buyers that were sitting in Amazon, especially following the announcement from the split. So it was good to see that strong rally. I'm sure that buyers are still present, but hopefully a lot of them took profits as we pretty much look to smack our head into resistance here at this 29.86 mark. So that's what I would look for. 29.86 is that mark in which we're going to smack our head into resistance here tomorrow. So maybe about another 35 to 40 point move tomorrow would not be surprising as we lead into FOMC. And that's why I say there's a high possibility that we pretty much see continuation with Apple potentially going towards 157.50, with SPY potentially going towards 430 in that same breath. We could see Amazon continue and get a nice little further push, another 35 to $40. So 29.86 would be the mark in which I would look for though as potential resistance, and that's where I would look to potentially take my profits. All right. Other than that, that kind of wraps up today's session, guys. Hopefully, that pretty much gives you a good insight of what I was looking for. Going into tomorrow, we'll see what ends up happening. I'll just take it day by day, waiting to see what the market gives us. But I'll be looking to hear what Powell is going to say. Most importantly, it should be roughly around 2 p.m. Eastern tomorrow, is what I saw when I checked on the website for the FOMC. So 2 p.m. Eastern. So like I said, we have a lot of time from between open until FOMC. We get that announcement, his statements. So just be cautious about that. And if you do not want to get caught in the volatility, definitely look to close your positions, I would say by 1:30 p.m. Eastern, so that you don't end up getting caught in that volatility and you pretty much cost yourself. All right. But other than that, I think that'll pretty much wrap it up for today's session. And hopefully that pretty much gives you guys some insight going into tomorrow and pretty much all the things that were just going through my brain and the scenarios in which I'm looking at to play this. But I think that kind of wraps up today, guys. I will see you guys again on live tomorrow. But appreciate you guys joining. Drop a like. But again, I'm out. See you guys.